Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
10,700 is here again, so pretty good going. Tata Steel has moved up. Remember, yesterday's news was very positive. The stock, though, ended more or less flattish or mildly in the red. It's recovered its losses today, so Tata Steel's bounced up. Maruti, in fact, that stock as well is now up close to around 1.2%, and even Bajaj Auto is holding on to its gains. So good news, but even from the broader markets, you have something like a Just Style. That stock seems to be dialing in the right number today. That's moved to the high point of the day. Pull up the intraday chart of Just Style. Volumes picking up as well over there, up close to around 5.5% as we speak. But how do you trade the Nifty? We're at 10,700 odd. Ashwini Gujral as well as Rajat Bose join us. Hi Ashwini, coming across to you first. Is this the real thing? Would you be looking to buy into the Nifty at around 10,700 or in a bit of a dip? Or do you think it's giving us a perfect shorting opportunity?
See, it's clear that the market is covering shorts, and it's also clear that the rest of the world is also covering shorts. Plus you have Europe, which should open higher. So my sense is the short covering will pick up, and possibly Nifty could gain 25 to 30 points. 25 to 30 points. Probably the bank Nifty can again gain 100, 150. So that way the market is positioned correctly to have some upside. The risk of a downside breakout seems to be getting over, and once we cannot break one side of the trading range, generally the market tends to rush to the other side. So my sense is next 2 or 3 hours you should see fairly strong short covering, both in large caps and mid caps, financials, metals, everything should participate. So for the moment, Kotak is a buy with a stop of 1330, target of 1375. Tata Steel is a buy with a stop of 560, target of 585. And RBL is a buy with a stop of 553, target of 570.
Okay, let's get Rajat Bose into the discussion as well. Rajat, how have you seen trade so far and your trading approach towards individual stocks?
Talking about the Nifty, I would say that the Nifty looks quite bullish now, but the critical level that I'm watching out for, what I referred to earlier in the morning, that is 10,716. If 10,716 is taken out decisively, then we can expect the Nifty to scale up to something like 10,740 to about 10,760 towards the end of the session. And now, unless we fall below 10,667, then this bullishness is likely to continue. At least there is no major threat on the downside. But going with the current momentum, I've chosen 2 auto stocks. One is Maruti. The first target that I referred to has already been met in the futures segment. In the spot segment, I would put a target of 89.85, which was the second target originally, and the stop loss now should be advanced to 8885. And M&M, I would put a stop loss below 886 and buy that as well for a target of 904 to about 907. I expect the auto stocks to do well, continue doing well today.
Okay, all right. Thanks so much for that, Ashwini, as well as Rajat. By the way, the Nifty has hit a 50 now. We have moved to the high point of the day. We're up close to around 50 points. And keep in mind that now we are trading above the 50 DMA as well. That's the level that we managed to close on a closing basis on Friday itself. Yesterday, in the first few minutes itself, it broke. So that was a bit of a worry. But currently, we're holding above that level. The 50 DMA comes in at around 10,694 odd. So keep an eye out on that one. But let's pull up the European markets. Let's see what they are doing. Remember, in yesterday's trading session, they ended with some red. So those markets, in fact, the futures were indicating that they're going to bounce back a bit. There was some political instability in Germany yesterday. Now, most of that seems to have resolved. But the CAC, for the time being, opens up with a gain of around 0.5%. Even the FTSE is sitting with a gain of around 0.5%. So good going. The bulls would like to see that screen. There's support coming in for the European markets. Could be good times for the second half of trade. And the DAX, that's the one that's reacting to some kind of resolve in terms of the political situation that's playing out in Germany.
Welcome back. Commodity stocks have bounced back today after the drubbing they took yesterday. So Tata Steel in the news on account of its European JV. That's higher by close to about 1.5%. SAIL is looking quite smart today. So that's a stock which is moving up. Nalco has some green going for itself. So across the board, commodities is a pack which is rebounding from yesterday's losses. Also keep your eye out on a couple of the other big movers. We're talking about Industries, how they can unlock value in one of their contested subsidiaries. Just Dial, Nigel was referring to it, now higher by close to about 5-odd%. NCC on the back of an order win. Indiabulls Real Estate too inching up, now higher by close to about 3%. But back to talking about commodities and Tata Steel in particular. Tata Steel and ThyssenKrupp have signed their definitive agreement to combine their European steel operations. This 50-50 JV will create the continent's, that's Europe's second largest steel company. Tata Steel's Kaushik Chatterjee told CNBC TV 18 that the ThyssenKrupp JV will be EPS accretive as 50% of the company's profits will flow into the Tata Steel India arm. Speaking to Nisha Podar, he says full synergy benefits of 400 to 500 million euros will take 2 to 3 years to kick in.
I think this is a collaboration and a partnership that has been built on a very strong industrial logic and footprint. And I think the Indian shareholders and the company will be in a much more financially robust position. Not only are we going to look at deleveraging on the deconsolidation of about 2.5 billion euros of debt, we will have consolidated interest costs which will come down by about maybe 1,000 crores. We create balance sheet appetite for the growth in the Indian business. And therefore, I think it will certainly have an earnings accretive position, not to mention about the fact that as a 50-50 joint venture, when we account it on an equity basis, we will have the earnings of the joint venture company, and with our expectation is also that it will be a free cash flow business from which the shareholders will be duly serviced.
So you've said synergies of 400 to 500 million euros per year. Is that expected to clock in from the very first financial year of your operation as a merged entity?
So I think there are certain synergies which has the potential to start faster than the others. For example, there are ones which are the procurement synergies and synergies on account of the network. These are the ones which will come in possibly first, and then there are synergies which will flow in as we go along. Our estimate is it will take 2 to 3 years to mature on the numbers that we have guided for.
You said that 2.5 billion euros passed on to the joint venture that will be deconsolidated from Indian entity. So that means 20,000 odd crore rupees going from your overall net debt that you left in the end of FY18 at 86,000 crore rupees. So that will reduce to 66,000 odd crore rupees. But then you're also buying out Bhushan Steel, where you've said that you're taking a debt of 16,500 crore rupees. What are your plans for debt management? Are you comfortable with these levels? And with this debt on your books, would you still pursue Bhushan Power and Steel?
So I think if you have to look at the Bhushan Steel acquisition, this has been done on a very prudent capital structure. We've contributed about 18,000 crores of equity related from Tata Steel and about 16,500 of debt. For a 5 million plus ton facility with very strong asset configuration, especially on the downstream, and a market presence. We are replacing debt with the acquisition of fundamentally strong Indian operations, as in the acquisition in Bhushan Steel. Bhushan Power, I can't comment because it's currently in the court.
All right, then. Tata Steel reacting positively, sitting with a gain of around 1% in today's trading session. But outgoing chairman of HUL, Harish Manwani, speaks to CNBC TV 18 in his first interview in nearly a decade. Let's hear out what he had to tell us.
I think maybe I'm an eternal optimist, but I've always believed that in India there's always a light at the end of the tunnel. I think the question is how long is the tunnel, okay? But there's always light at the end of the tunnel. India is a market, particularly from an FMCG point of view, where we are relatively underdeveloped in terms of our consumption. And I think the potential, therefore, going forward is huge in every single sector and segment. So I feel very bullish, medium to long term, about the outlook for the industry. Clearly, there will be some issues from time to time in the short term. If you look at where we are today, and you've begun to see how in the last few quarters, generally there are signs of a pickup. Obviously in India and for the FMCG sector, rural is critical. Hopefully if we have a good monsoon, which it looks like we're going to have, and some of the benefits of all the various schemes that are going on in the rural areas, and also if you like the impact of GST, I think if you combine all this, yeah, I mean we could see a pickup in demand. We are beginning to see signs of that, and I feel very hopeful that things will look better, and certainly in the medium to long term, I feel very positive about the outlook for the industry.
How long are we away from pre-GST growth levels? Is there maybe 2 years, 3 years? Do you think at the end of this financial year we could be back to pre-GST levels in terms of growth for the industry?
Again, I think, when you talk about pre-GST, you're talking about a certain phase. Remember, there was another phase before that. Business has cycles at the end of the day. And I think the important thing is, where are we in that cycle? And how long will that phase last? To my mind, we are actually now entering a phase where I feel optimistic that we should be getting into a higher growth phase than we've seen. Having said that, I don't know whether it's going to be pre-GST levels or higher or lower. That we will see. But I really wouldn't worry about that, because at the end of the day, if you spend all your time trying to forecast this to the last percentage, I think it's a little bit of a waste of time. It's better to focus on giving consumers what they want. And importantly, and this is a really important point from our point of view, we are market leaders in many categories. We also have to drive market development, and we are absolutely clear about that. We need to make sure that we drive market growth in some of the categories. So if you take, for example, some of the personal care categories, we have always been market builders. Okay? We are market makers. We don't just go for market share. We try to make markets.
All right, back to getting an update on what's happening in the Mumbai Rains. As we've been pointing out, Mumbai has received heavy rain since last evening. In fact, on account of the heavy rains, another bridge collapsed, this time in suburban Andheri. Received heavy rain since last evening. In fact, on account of the heavy rains, another bridge collapsed, this time in suburban Andheri. And this has resulted in widespread railway services getting disrupted, and traffic on the road is also hit. Let's get in Yash Chen to understand which routes are blocked and what the situation is on the ground under the sky right now. Yash?
Well, Mumbai did receive heavy rains since last evening. It, of course, rained through the course of the night, and it's continued thereafter today. It was a result of this heavy rain, which we saw in the form of that unfortunate incident which took place at Andheri station, where a part of the footover bridge really collapsed on the railway track. Also blocking the movement of trains as far as Western Line is concerned. A quick update as far as the situation at Andheri station is concerned. What we are given to understand is that the NDRF, RPF as well as the BMC team are currently conducting a rescue operation in which about 6 individuals have been found injured, and 2 out of those 6 are really critical at this point of time. As far as movement of train is concerned on the Western Line, we are given to understand that on one side of the Andheri, trains are running between Bandra to Churchgate. Also on the other side, trains are running between Virar to Borivali. This is as far as Western Line is concerned, but on the Central Line, we are given to understand that trains are running between CST to Goregaon, but there is a delay of about 25 to 30 minutes when we talk about that particular movement. More importantly, the streets of Mumbai, the heavy rains have led to waterlogging as far as the low-lying areas are concerned, which has also led to heavy traffic in some areas, and the suspects are as usual. All roads leading to the airport, the SCLR road, Oberoi, areas of Malad, as well as Lower Parel, where I am currently standing. One very important piece of advice as far as the commuters of Mumbai are concerned, please keep following the Twitter handles of Western Railway as well as Mumbai Police to get constant updates as far as how the traffic is really moving as far as the streets of Mumbai are concerned, and also about the movement of trains.
Okay, Yash, you take care of yourself as well out there. We'll keep getting Yash. He'll keep giving us all the updates. No worries in terms of the markets though today. Nifty is holding with good gains of around 50 points. The Nifty Bank as well is now gradually moving higher, sitting with a gain of around 50 points. Slip into a short break. You come back.
Welcome back. Some very interesting developments are taking place in the commodity space, especially in India, where we understand a gold savings account. So instead of putting cash, you can now put gold in your savings account and earn some interest on it. This, of course, is still being finalized. Manisha Gupta joins in to explain all this. Manisha, give us a full lowdown. This is interesting to all of us now.
Well, absolutely. All of us hold a lot of gold, and the gold prices haven't done so well. And the various measures that we have seen in the country really has been going to your old jeweler, selling gold to that, exchanging, etc. But the government in the recent many months and years have brought in a lot of gold policies. We have seen the gold sovereign bond, we've seen gold monetization scheme, and a comprehensive gold policy, of course, is something that is in talks for last couple of years now. And within that comes a gold board, a gold exchange, and a gold savings account as well. So what we understand is that the gold savings account is something that is now being finalized with the recommendations that the Niti Aayog did give, and with the recommendations that IBJA also did give. The Finance Ministry is having, we understand from sources, of course, that Finance Ministry has readied this proposal and it would be in cabinet soon. So there could be a lot of developments into this. One, of course, is it would be like your savings account where you put in cash. This would be a gold savings account. You will earn interest on that. And as the gold prices move on a daily basis is what will tell you on how much you own really into that account. So really interesting, and the country has been looking forward to that as well. And we are now joined by Surendra Mehta, who's National Secretary, IBGA. Mr. Mehta, as we were talking earlier, you also sent a proposal on how this can really work to the PMO. What really are the details onto this? Because we do understand that after so many deliberations and the scripts that have been sent, the proposal now finally is ready. So what really can be expected out of this?
See, basically, Manisha, what we told government that we have a sovereign gold bond scheme.
Right.
But the minimum investment in the sovereign gold bond scheme is about 1 gram, which is almost equivalent to 3,000 rupees. So we said we need to have some schemes for the poor people, which should run through post offices and through the banks, which should run through post offices and banks. So what we said that why we cannot have the gold recurring deposit scheme accounts or the gold savings schemes account, wherein a person puts in money on a regular basis or time to time, and instead of a rupee gets credited to his account, the gold gets credited to his account, and he should be allowed to withdraw this in form of gold or in form of rupee.
Right.
The only issue is whether the government will be really giving interest on this or not. But what I understand that if sovereign gold bond schemes gives an interest, then this recurring deposit schemes or savings schemes.
So, what we understand from the sources is that the banks, this would be at the discretion of the bank to decide on what kind of interest they would want to really pay for this. So clearly that is not very, there's no very good clarity on this one as yet. But I also want to know on what kind of a participation would we really see on this. Do you see a lot of people going on for this?
Definitely, Manisha. See, this is the real truth of our country, that we need to accumulate gold for the marriage of our children, for the education of our children, for the health, and for all other purposes. Gold has been one kind of the safe haven or the investment always in the minds of Indians. And what I see is that instead of, buying gold where the purity may be one of the concern, it will be interesting that people put money in the gold saving account and withdraw the money only when it is really needed. So I see a lot of participation, and that is why we have proposed that it must be deep-rooted through the post office in the country, because we have a number of post offices in the country which caters to the rural area also.
My other thing really is that are we looking at a gold deposit account as a standalone? Because there is so much that is being discussed when it comes to gold, right, from a policy to an exchange to a gold board, etc. Will this come standalone, or do you see everything coming in tandem when we talk about this?
No, I don't see it is coming as a standalone, but it will be part of the various measures which the government is taking, and which the Ratan Vatal's Committee on Niti Aayog has also recommended. So this is one such recommendation, and I see that this is really getting through, and this is really going to help the poorest of the poor people in this country, and he will keep investing money in the gold account.
Come in also on the fact that we have seen the import duty as being something that the government has not moved on at all. Do you see with the comprehensive gold policy and a gold savings scheme, etc., coming in, the import duty part in that sense wouldn't perhaps be needed as much?
Absolutely. What after the depreciation of rupee in the last couple of days, the gold market has always been fearing that government may once again take the stand on the increase of the custom duty or increase of the GST rate. But I think with the introduction of the gold saving account, government is taking care of the duty part, and government, I think, is prepared to take the sovereign risk as it has been taking in case of sovereign gold bond. So I do not see once this scheme is implemented, there in fact, in my opinion, there could be a reduction in duty once such deposit accounts are introduced in the country.
One final question then, and what is your sense really when it comes to the gold monetization scheme? Because that really was a flagship scheme, to ensure that the gold does come out of the households, and that really hasn't taken off so well.
See, we need to understand that there are many gold recycling schemes being run by the jewelers. Now, these gold recycling schemes are, in fact, I would rather say they are probably the private gold monetization scheme run by the jewelers. So we have been time and again saying to the government that please allow jewelers to collect the gold under the gold monetization scheme. So this indirect recycling of gold gets accounted for as the gold monetization under the gold monetization scheme. And I think it is the need of the hour. The almost about 150 to 200 tons of gold is recycled in this country, and it is all recycled through jewelers. Right. So it is a kind of gold monetization only. So once it is routed through the proper channel, it will all get accounted, and we'll have a very clear picture of how much gold is monetized in the country.
So the only plus point is that we have moved on in sense of a proposal being ready. Just waits a cabinet nod now.
So how soon could it take, according to you?
It's been in talks for the last couple of hours, so I am hoping.
Okay, so that's how on top of it you are. But thanks so much, Manisha. This is what CNBC TV 18 is picking up from its sources. For the markets hovering around that 10,700 mark, if you pull up the intraday chart, some of those dips have been bought into, and as we speak, we've been plateauing for the last 30 minutes with a gain of close to about 40 points in the Nifty, while the Sensex has seen a rally of nearly about 130 points. With that, it's curtains down on Halftime Report. Thanks again for watching. Stay tuned. Business Lunch is up next.